society or anything else. Yeah. And thank you for clarifying in case somebody might have thought I meant it. Yeah. The rating, no, there really weren't. You know, I'm not sure we know enough to do the right things on rating. Okay, but we have at present a pretty painful clause for rating agencies if you're one of the large ones in there. I know the House basically wrote them out of the code, and I'm not saying I'm opposed to that, I might add. Okay. But on the credit rating side, we had a pretty big liability burden that was going to be placed on credit rating agencies, and I think would cause them to pay a lot more attention to what they're doing.
Senator, on derivatives, Senator, was there any particular issue that's keeping you apart? The cleared trading, the standardized trading, the need for collateral, or the exemption for end users?
So at the end of the day,
was there any one of those, or all of those?
Well, no. On derivatives, let me be clear. Derivatives, let me be clear. On the derivatives title, Jack Reed and Judd Gregg. If you remember, Chairman Dodd assigned teams to work together during the health care debate one Saturday night, and he assigned derivatives to Judd Gregg and Jack Reed. The issue that has kept them from coming to closure, okay, although they're this close, has been how much of an end user exclusion should exist. And so, you know, they've been back and forth. I have not seen their language, nor has Chairman Dodd seen their language, I might add, because it's not quite ready yet, and that is a big title. And so let me say this: I give Chairman Dodd some additional slack because I think he knows that it's going to take probably a couple of weeks, to be honest, for them to resolve their difference, and I think he feels he needs to move ahead. I probably felt a better way of doing that would maybe be to leave that section out, add it as an amendment when it comes, but I understand.
Senator, thank you, Senator. Where were you when the talks broke off last night on consumer protection and on bank supervision regulation?
Well, the talks didn't break off.
What's the latest? What's this? We are.
Oh, you mean where were discussions? Okay. Well, look, on consumer. And by the way, I think the consumer title that Chairman Dodd puts forth will be very much shaped by our discussions. My guess is that he'll probably add a little. He'll probably veer a hair left, just to be candid, to make sure that but hopefully not. Okay, so where it was left is housed at the Fed, appointed by the President, confirmed by the Senate. One of the things about the Fed, and so since I can come like real clean now and not say, hey, things are going great, we're almost there, things are going great, we're almost there. We're still almost there, but it looks like we're not going to get there. The thing about the Fed, if you remember, the President said that he wanted an independent source of funding. The way the Fed works is the Fed gives whatever surplus is left back to the Treasury each year, right? So that was a way of solving that problem because, in essence, the Consumer Protection Agency would have an independent source of funding, right? So that solved one block. I think people should look at, I know there was a lot of negative reaction, but being housed at the Fed was a way to solve some issues. It housed it at a prudential regulator, but it really didn't report to the chairman, okay? So, it was a lot different than people thought. Here's where it's been. Republicans, conservative Republicans, I might add, have agreed to broad scope rulemaking. And that's never happened, okay? I mean, we're talking about rulemaking where the shadow industry has to live by the same rules that the regulated market in. That is I don't know, if I'm a consumer person, I'm saying, hey, that's sort of breaking ground. Where Republicans have drawn a line in the sand, and that sand has been honored, that line has been honored, is we do not want consumer involved in enforcement. And that's the arrangement that we've come to. That's what's been agreed to. In other words, if consumer issues exist, we want the OCC to implement, or we want the Fed to implement, or we want the FTC to implement. We don't want rulemaking and enforcement combined. And so that's the arrangement we've arrived at. There was a veto process. We made the first real offer on consumer a week ago Saturday. It was actually a real offer to try to get a deal done. And there's a process through which rules would be made. It's consultative. there is a veto process if the safety and soundness of the financial system or systemic risk is created. There's a veto process by some regulators, and we had offered that in the beginning. And by the way, Dick Shelby, Judd Gregg, Mitch McConnell, Mike Rapo were in discussions as to make that in a way that really worked for all of us. We made the offer, and it was accepted. So, I mean, we had nothing. Here's where we were on consumer. We were down to issues that I promise you none of you have ever dreamed of in your life. We were like 20 rungs down in Treasury working through if there's a conflict and there's a judgment, and then how does that all work out? It got down to judicial issues, if you will, so that's the sort of the fine-tuning that we had gotten to on consumer. But again, the major concepts absolutely agreed to.
Well, what about independent ability of the consumer agency to conduct compliance exams? That's the key issue.
Yes. On they had to go in joint examination, which is always what we've said. Prudential and consumer being together, joint examination.
Conducted at the regulatory level.
Conducted at the regulatory level. I mean, it was a huge win. But what we're concerned about is that enforcement piece, and I think that's an area where we were able to reach each other's accommodation. We accommodated, on the Democratic side, the issues that they wanted to, and where we had to ensure was the fact that enforcement would not be part of this entity's this realm. So I think I've answered that fully.
Supervision and regulation, was the Fed going to...
So let me tell you that, look, supervision, I think the rearranging, I'm just going to come clean on this. I think the rearranging of the deck chairs is one of the silliest efforts I've seen. It reminds me of being in business years ago, and you'd have a company that was in trouble. So what did they do? They changed their organizational chart. They still made lousy widgets, okay, but they had a meeting, and this person moved over to this box, and this person moved over here. Nothing changed. Still really lousy widgets, okay? That's what this whole reorganization to me is about. It's not worth the effort, okay, in my opinion. OTS going into OCC, that makes a lot of sense. Everything else to me is just moving deck chairs around to act like you've done something. What we need to do is make sure the regulatory agencies that are in place do the things they're supposed to do. Okay, and so, I think I probably shouldn't be saying this. I think it's all been kind of silly. I think at the end of the day, personally, this is my prediction. Nothing changes much. Okay, but let me say this: a lot will change. A lot will change as it relates to the standards these entities are held to. The Fed, no doubt, is going to have its wings clipped. Okay, there's no question it will have its wings clipped. It will still be supervising, in my opinion. Well, let me say this. I know the way the bill sits now, they'll still be supervising the large entities, the OCC, the middle-sized entities, the FDIC, the group they now see. The debate today is over whether the Fed will do the smaller institutions they now have. And, there's all kind of lobbying taking place right now by board Fed governors around the country. I mean, they like their marble buildings, and they like their stature, and they like their relevance to, and I'm sort of being funny. I'm not trying to make fun of them. But the fact is that I don't see any reason to change that, to be candid. It seems all kind of silly to me. It's like we're doing something and we're not doing anything.
We have time for one more, Senator.
What's that?
And we need to go to a new person. I'm sorry.
Senator, what about payday lenders? I know some people wanted them in there.
What's that?
Payday lenders, I know some people wanted them included.
They are included.
Federal regulation?
Yeah. I mean, that's what's amazing to me. Remember, the rulemaking scope covers everybody involved in financial activity. Everyone.
But do they require a chart?
Huh?
Do they require a chart to get covered?
They all have state charters just like state banks do, and the FTC enforces. And the FTC has been hamstrung because they have an arcane rulemaking ability which makes them ineffective. And this changes that and creates a rulemaking standard that is across all financial activities. Then the FTC would enforce just like at the banks, the OCC. One of the things that I think many of you are missing is that credit unions, community banks,